Welcome to the Navigator Podcast. Welcome to the Navigator Podcast. Today is another installment of the Brad Show. So, morning, Bradford.
Good morning, Bradley. How are you?
I am well. So, wanted to talk about job costing because I hear that word all the time and then I see confusion in a lot of people's eyes. So, kind of why do we do it and why should we do it?
Well, why don't we start with what it is? I mean, I think there's some misinformation. A job or a project, they're synonyms, is a unit of work. So there's a start and an end date. Hopefully there's a scope of work. There's a budget, possibly a bill of materials if there's a material involved. And as we've talked about in the past, hopefully there's a plan on how to accomplish the job. So job costing is simply the application of financial measurements to that unit of work. It's like a miniature P&L, profit and loss statement, just for that particular project. So it's got revenue and it's got expenses and it's got profit, hopefully.
Right, hopefully.
Yes, right. And as to the why, there are two primary reasons. One of the reasons, of course, is tax audit, compliance issues. But I think the more important reason, it's really about being able to manage your business effectively, to be able to have repeatable projects, have profitable projects, and have them contribute to the bottom line of the business. You need to have some method of accurately measuring what really happens within those jobs.
Got it. Okay.
Yeah.
And these are all, I think all our sessions are, on a theme, and hopefully people will listen to more than one of them because I think we cross-pollinate them well, but also we refer to several. So when you look at labor burden, I find a lot of companies just pick a number and say that should be good enough because I pay my guys $20 an hour, or I'll do cost of goods to $30 an hour, and that should be fine. What are problems when I'm not burdening my labor correctly?
Well, if I'm a business owner, I really want to understand the truth about how jobs are being quoted, how they're being executed, and how profitable they really are. So burden, just so everybody understands, are all those costs that are associated in trying to support an employee. That includes things like PTO, holiday sick days, payroll taxes, benefits, and also the utilization, how much of that employee's time is actually being spent on actual billable customer work. So we want to work with reality and understand that true cost of labor when we're building our proposals and when we're executing our projects to help manage our business.
Okay. Yeah. What happens, I mean, and we hear the term recover my burden. What happens when you don't recover it?
Well, the first thing that happens is it makes it more difficult to get an accurate burden. By recovering your burden, what you're doing on your income statement is you're allocating all of those costs that go towards supporting employees, and then you're taking those costs and offsetting them, usually in a contra account, against your job costing for labor. Ideally, those two will balance out so that you know that all those extra costs are being allocated correctly into your projects. So if you're not doing that recovery and you're not doing that measurement on a regular basis, you're probably not getting true accurate burden rates.
Got it. And then what I find is that oftentimes gross profit is inflated, which goes oftentimes to the salesperson, so they don't mind that at all. But the challenge to me is that all the stuff that we didn't capture goes into overhead, and I'll call that an uncontrollable cost because it's kind of a black hole, and we really want to be able to manage that.
Very true. I mean, you brought up a great point with sales reps. One of the biggest reasons I see for resistance to having more accurate burden rates is because it affects commission plans. And a part of that is understanding the balance between what we're paying commission on and adjusting rates versus adjusting our margins and giving ourselves a false idea of how profitable jobs really are. And the second part of that you talked about is critical, and that's your fixed overhead. Your gross profit has to cover your overhead, and then whatever's left over becomes your net profit. And really what it comes down to, the most important number is that net profit.
Right.
So being able to manage that fixed amount of cost and move as much of it into a variable into your projects is critical in being able to manage your business effectively.
Well, and again, every dollar I spend cost goes to net, in that gap between gross and ops. And again, I find too many people are using gross profit as a measure, and it is a measure, but as we talked last time, it's a fictional measure. It's really the net we're after, and yet so many companies don't share that number with anyone.
Very true. Yeah, these are not numbers you have to necessarily report to any compliance body. These numbers exist so that we can do a better job of understanding our businesses and be more effective.
Right. What do you see the most mature companies doing?
Most mature companies have a cycle, and they do that recovery as we talked about. So they have on their income statements places where they keep track of those costs. They have contra accounts, and on a regular basis, they're measuring it, usually on a quarterly basis, worst case, maybe an annual basis. But they're constantly reviewing those numbers and making sure they're accurate, because they will change over time.
Right. And then I would assume that, goals are set out for each department to really, how do we manage those controllable costs?
Right.
Yeah.
Absolutely.
Okay, great.
Yeah.
Thank you. Hopefully
Thank you.
we've cleared that up a little bit, and I'm sure we'll continue with more. Thank you.